Hey, welcome everybody to the 40 Finance channel. Just checking in here for a little bit near the end of the day on Thursday. We had some nice volatility. I say nice volatility because it just makes things a little bit more interesting. In the last hour of trading yesterday, after the Fed released their minutes, and I think if I remember correctly, we saw the NASDAQ down over 3%. We even saw the Dow 30, formerly unstoppable, even in this downturn. It got tagged just a little bit yesterday. So I think with what we saw, at least where my mind's going right now, is trying to think of where does this all land, right? And the answer, I think is fairly straightforward, but on the same token, with each individual stock, you're going to have a ton of variables. And in my opinion, at least the strongest indexes, Dow Jones, NASDAQ, maybe not NASDAQ Composite, let's just say QQQ, and S&P 500, I think they're reaching a little bit of stability. And I think if you're looking at Russell 2000, man, I'm not saying it can't go down more, but boy, has it gotten hit pretty hard. So I think we're getting closer. It obviously, it's anyone's guess where we end up from here. But I feel like the NASDAQ in particular, which is the one that I follow the most, is starting to sort of flatline out a little bit to where I would expect it to be. Now, that doesn't mean every stock in the NASDAQ is cheap, but it's a good sign. And I'm getting ready to start to pair in more frequently into the stocks that I'm looking at, because even though it's impossible to call the bottom, I think you can start to pepper in some sales and DCA, if you will, on the names, assuming they have profitability. I guess that's my big catch here. If you look at EPS trends, they're decent. They're really decent. We won't know for sure if analyst EPS projections hit until January or February, depending on when the stock market, when that individual stock reports. But I do think that some of the winners from last year will continue to win, and if their EPS projections get confirmed during earnings, we can see another run. It's just a matter of, again, which individual name do you want to talk about? Now, hey, Echoes, thanks for typing in the chat. I always wonder what happens if that thing's working until somebody types it in. I'll get to your point in a second about PayPal, Coinbase, etc. But just to show you really quick, I don't have a YCharts, login or whatnot, so I can only do the basic data. But here's your NASDAQ PE, and this is a 5-year chart, 3-year chart, even 1-year chart. We're higher in the 1 year, but this isn't horrible. I mean, this isn't a tech bubble or what was it called? Not the web bubble. I can't remember. Whatever they were calling the 2000 crash. This is not that type of territory that we're in right here. Okay, so it's arguably was more expensive when prior to COVID, and now we're starting to pare back a little bit. Now, some of this we would have not been able to project because we didn't know that earnings were going to be so good. And now some of you jumped into the right names and it paid off for you. But, from an analyst standpoint, there was no way to project some of these earnings would come out the way that they did, particularly the companies like Google and such that basically doubled, their EPS over this time. So that's just one, chart, the NASDAQ. We look at the line today, plus 19% plus 0.19%. Russell 2000 up a full percentage point, which is huge. What else we got? S&P sort of back to flat. Dow 30 bleeding out just a tiny bit. And gold, I'm so surprised that gold is down I'm not a gold junkie by any stretch, but it does, in this interest rate atmosphere, I'm shocked that we haven't seen a run up yet. And the 10-year bond added another percentage point today. So I think we capped out yesterday at 1.7, and now you're at 1.73. It's not an epic change, but since it did go up, it surprised me that stocks are hanging in there. We know the big test is when this goes to 2, which should at least be by March when we have the first interest rate hike. Now, that's a huge test of the market. It's historically minimal, but we see how easy it is to scare the market into selling. I didn't look at Bitcoin today. Bitcoin down -5%, but the crypto 200 as a whole, I don't exactly know what's in there, but it looks like it's up a little bit. If we look at, let's see, PayPal, since Echoes from Above brought it up, and it's a stock that I own and am particularly fond of. Let me sort this out a little bit here so that it looks better. All right, so PayPal over the last month, I wanted to get it right before Thanksgiving because I think that was the weakest. So right about here, November 30th, 184. Today you're at 193. Is this the bottom for PayPal? And I'll give you my opinion from somebody who owns it. I think that there might be some room left in it to go down a little bit more. But I do think that they come out very strong and swinging in 2022. So if you took this 527 estimate for PayPal, that would give you, let's see how Yahoo does it here. Yahoo's saying 35 times forward PE. I'm not going to do the math, but we'll just assume that that's correct. And we go back in time, right? 18, 19, you're in that 30 range, is a historical equivalent. PEG ratio of 211, a little bit higher. So what I would say with PayPal is it's getting close. And if you want to call it plus or minus 5%, plus or minus 7% at this spot at 193, I don't think anyone could argue that as an intelligent price target for it over the short term. Now, for me personally, I buy, we'll see if there's any more left, but I was buying in the 180s. I wanted to just, that's below my existing cost basis, and that's what I'm looking for. I do want to get to 100 shares of PayPal so that I can do the call options, covered calls, try to make a little bit more money off of it, because I did hold it for a year that it essentially didn't do that much. So I'd like to try to earn a little bit more from it. Thank you, Klamoth79, the .com crash. I was thinking of websites and I was thinking of domains and everything. You came in with the .com. Thank you. Lions here, good to see you again. Dow is down, but it has been on a tear. And this is, this has kind of been my point on the whole overall market weakness, or should we say perhaps not that weak at all. The top dogs are almost unfazed by some of this. So we did get this little crash, if you will, or pullback right around Christmas time. And ever since then, growth stocks, let's see if we can do this on Yahoo. I was going to try to compare the two. Pull this down. Let's try this. There we go. Now let's add. What's a good one to add? How about the Russell? We can get it. Maybe not in there. I have to think of something else real quick. Oh, that's an indicator. That's my problem. I need this one. All right, so this is what I'm talking about with the small caps, with the Russell compared to the big dogs. So the Russell fell further back in that sort of Thanksgiving week or whenever it was that we saw this red line here. The Russell not only fell further from its peak, but it has stayed down. And this stretch here was horrible. You know, through 1221, this was horrible compared to the Dow. And even though the Dow has been sailing back up, and the Russell has too, it is not anywhere close to eclipsing it like it had been all the way through October. So when you talk about market weakness, I guess this is my point. When we talk about market weakness and we talk about the bottom of the stock market in general, there's a lot of pockets that are still way down, and I understand why we can't see the light on those small caps. I have small caps that have been absolutely destroyed, and I'm just leaving them off to the side for now, and we'll try to figure out where this thing lands. But if you're talking about buying the Dow or the QQQ or something like that, that's a top heavy, this could be the time to start chunking in a little bit. That's what I'm doing anyway. I'm not a forecaster or anything like that. I'm just trying to share my thoughts here. And if you would like to do leverage strategies, which I'm probably going to do a little TQQQ here at some point this year on a very small basis, this might be the kind of setup through March where you can buy on red days and hopefully set up a nice base in case this market takes a turn to the upwards. There's a lot of risk in that. To figure it out yourself if you care. All right. Lions average down on ARK. I've been thinking about that one too. So let me see. That would have been a better comparison than what I did. So let's add ARK in there. It'll be a blue line again, but you get the point. So we know what this chart looked like prior, right? That's how far high growth has went. I mean, if you just assume that ARK exemplifies high growth, I mean, this was a way better example than my Russell. Gosh, you do have to start thinking about it. The problem, I think, it's not even a problem. The catch is when you have a lot of stocks that don't have earnings, where is the floor? And that's the $1 million question, I think, for all of us. Let's try to find a name that can kind of help us with that. Bring this over. Squeeze it in. And I'm going to do... How about Shopify? Now, Shopify has earnings. May not be the best bet. Shopify has earnings, so it's not exactly what I'm looking for here. But even if you go to price to sales, 43 times its current standpoint. Prior to the pandemic boom, you're at 15, right? But that was a long time ago. Shopify was a much different company. You know, they started to pick up some steam in 2019. And I remember very specifically 2019 for Shopify because I saw them on YouTube a lot with guys that were selling products and talking about building Shopify stores as a way to build a business. So let's say this is close to what it should be, even though that's much higher, perhaps, than a lot of people would pay. 43 times today, 31 times here. I mean, do you say perhaps that this is the right spot? Don't forget, in 2019, we had low interest rates, very low. 2018, if I get this correct, I believe 2018 was the time when the Fed started fiddling with interest rates. and then 2019 they backed off of it. I have to double check those dates, make sure I'm not wrong there. But this seems like a more obvious baseline for Shopify. Now, if you're going to deal in price to sales, you're going to have to take your time and project ahead, because projecting forward price to sales is not an easy game. And you can obviously, the crux of it is when you're making projections based on projections, you're exemplifying the base data, right? So I think a common theme that we saw in the pandemic, when folks had all the time in the world and everybody's a stock expert and whatnot, you saw a lot of like free cash flow multiples, and those have obviously not panned out, right? Well, the problem is if you take a stock that's trending high and you say it's growing cash flow at, let's just say it's 3x, just for fun, we'll pretend it's a small cap. And so you build this model, some sort of 3 or fucking 5-year model at 3x, it inherently has a couple risky assumptions. The first one is that you'll have 3x next year. And then the second one is you'll have 3x for 3 years or 5 years. And that one simple over-calculated metric compounded throughout your equation screws you, right? So I get some people will bring up a lot, because I use Wall Street analysts' EPS projections all the time, very comfortable with them. And they'll say, Wall Street analysts are wrong all the time. And that is correct. And let's be fair, though, on EPS projections. Right and wrong is a very fine line. A $5 EPS projection that turns into, let's just say, $4.85, that's not a huge multiple change in the price of your stock, as long as you take the PE ratio and you nail that, right? So 15 cents isn't going to kill the projection, but your PE ratio projection has a much better chance of killing the stock target. You guys have probably seen that in my videos, right? If I project that the PE valuation is going to go to more historic times, let's say stock A is at 50x now, I think that it's going to go down to 40x, but it never does. I could have nailed EPS all day, but if the market's paying 10x more valuation, then that stock's still up there. And it wasn't my EPS number that was wrong, it was the multiple that was wrong. So, in this game, it's easy to put numbers down, right? It's much harder to hit them, and I think it's much harder to be realistic. And that's where, like, most of my price targets that I throw out in videos just for fun, they're going to come in under, more than likely, because I'm going to look at them twice and say, is that really going to happen? And so I'm more likely to undercut the multiple, and at least for my stuff. Now, what happens there is I'll say Microsoft's going to be $295, and then it's $320, right? And if you go back and look at the numbers, or you watch the video, at the end, I clearly outline it. I said EPS is here, PEE is here. That's where I got this price. 9 times out of 10, when the price is wrong, it's the valuation that folks have decided to pay more for. All right. Let's see, who else is here today? Lion's got 12 shares of PayPal at $197. Could have added more, but you'd rather have cash. I think that's fine. Content with what you have, which is totally fine. I mean, for my unique situation, I'm not, by the way, saying PayPal is going to be the stock of the year in 2022. I don't believe that, actually. I think there's probably other candidates. But I had inched close enough to 100 shares that I just decided I'm going to get those 100 shares. And now's a good time to do it, because everything that I thought was going to happen with PayPal's earnings hasn't quite materialized yet. And so I'll take this opportunity. And now I've got 80 of them. So we're talking about, you know, a bridge to 20. And then I can start making the covered call premiums, which I've never done before. And that's going to be a game that I play. I want to hold PayPal for long. I have absolutely zero concerns about where is PayPal still a company in 2024. That's not even in my thought process whatsoever. So little different game than Lion, and I can understand why he's content with 12. I don't think that there's like this huge opportunity with PayPal at 193. I really don't. I think it's better to buy it at 193 than 300, right? But I don't want you guys to think that I'm pushing it as stock of the year, because it's probably not. Lion, it's going to drop further. Oh, he was talking about ARK. So ARK is down. We started to look at that, and I'll bring it up again here. We'll get off the charts for a second. Look at this another way. I'll tell you how I look at the QQQ. Let's go to holdings. I really wish Yahoo would do all the holdings, but as you can see here, the top 10, 49%. All right, so, you know, pretty good idea of where we are today. Hopefully you guys can read that. I'll try to make it, zoom it in a little. So right now today, Tesla. We talked about it yesterday. I would say, I personally still think Tesla is overvalued, but I also think that they are much closer to a fair valuation than they have been in some time, almost exclusively because their earnings per share seem to be in a position to go up substantially. And analysts have ridiculous EPS growth projected for next year. Let's just look at that so I can give you a number. 626 to 876. They're adding $2.50 a share. And at this point, it's hard to doubt that won't happen. Roku, formerly absurdly overvalued, in my opinion. Is it? I doubt it's still under 200. Remember my 100 PE video? If you wanted to get real greedy with Roku, and you were going to say forward PE of 100, well, that's easy math. That's $167. I think $167 for Roku, forward PE of 100. I do think they have the capability to outperform over the next couple years. That might, in my opinion, be a fair price, especially now that they're talking about billions of dollars. But, you know, that's just my take. Teladoc, I don't know a ton about Teladoc. Are they profitable yet? La-di-da, no. Okay, so I'm going to stay out on Teladoc. I think if you guys like Lion know that I don't hate the company, but I do think that this guy right here, Zoom, in particular, should at least have a healthcare line to compete against it. So I'm going to butt out of it. Square's down to a point where it passes the 100 PE test on a forward basis. The only problem with Square, as I mentioned yesterday, I'm worried that they don't have enough shiny objects for next year. We'll see what happens. Zoom is landing at about fairly valued. See, Morningstar's got them at 260. They're 177. The 100 PE test, which isn't really applicable here because they've reached this level of profitability. You know, you see where they've got to be, what, in the 30s? Oh, 50s. Okay. Now, the only catch that I just noticed on Zoom, if this pans out, so 2023, they're going to lose 50 cents if analysts are right. But important to note that their current year, they're currently in 2022. So this will be their forward PE. And it'll probably be summertime before people start looking at this, and the whole world could be changed by then. At least they continue to grow. So I wouldn't say Zoom is overvalued right now. So back to the list. I would say Tesla, roughly fair. You know, you can make an argument for $800, and I would probably agree with you, but let's just admit that they're never going to trade for a 30 PE. Roku, they probably got another 20% that they could go down to be 100% fair valuation on a PE basis, but we know about Roku is going to get a premium as well. Teladoc, I'm butting out. Square, I think, is pretty close to fair. Zoom is fair. Now, what about Shopify? Oh, we just looked at Shopify. I say on Shopify, it's getting closer, but 758 times 100, and it may not be as close as I thought. That would be a price of $758. So there's room here on Shopify probably to let out. Spotify, are they even profitable? They can't be profitable, can they? Oh, next year. Spotify, overvalued. Definitely an opportunity for this one to drop hard. See where those price to sales are. I mean, that's not bad, 4x. Shopify is not a stock for me. A, I don't use the service, and B, I don't think that there's much of a moat there. Spotify, pretty much the same boat, if not worse, in terms of moat, and they're 42 cents. Twilio, Coin, and Unity. I'm not going to go through the rest, but just eyeballing these top 10 holdings, how about this? 50% of them, just for fun, 50% of them are closer, much, much closer to fair value than they were. So I personally would not mind buying ARK here at 85. And I have it in my SEP IRA, and I might just do that. I'm not going to buy 300 shares, right? But what's the problem with buying a share right now when you know where this world used to be a month ago, month and a half ago, and where it is today? I mean, hell, if you believe in these things, you might as well. And the thing I said on my recent ARK video, I think still holds true. In my opinion, every stock in the ARK portfolio has not reached its full thesis yet, right? So does that happen? Probably, you know, out of that list of 10, maybe 4 of them do, if she's lucky, Kathy being the she. Maybe 3 of them do. Tesla's probably the closest. Roku is right there. Teladoc, I can't comment. Square's got 5 years before it hits any sort of major anything. Zoom's already there, cranking out at $5 a share. So I don't know. Coinbase is probably already there. The only reason that Coinbase flutters about is because of the price of crypto and the uncertainty of crypto trading volumes for the year ahead. So I don't know, man. It doesn't look that bad. And I would do the same exercise. I'm not going to do it, but I would put together the same kind of eyeball exercise for this QQQ, which I'm doing. So we all know these names. I'm not going to go through them, but you've got, you know, Apple, Microsoft, Amazon, Google, blah, 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 blah. Out of these top 10 names, how many of these are like massively overvalued? Apple, I would say yes, but who bets against them? Microsoft, probably a little bit, but who bets against them? Amazon, I would argue undervalued. Google, we looked at it yesterday. It has like a 4P of 25. Facebook, trouble finding momentum, 100% undervalued. Tesla, we already talked about. Google, NVIDIA, NVIDIA could be under $200 if things got really bad. But I just don't see it happening because they're the master at technology headlines. You guys know where I sit on PayPal. And Adobe just took a little bit of a nosebleed, I think, the other day. Let's see if I can bring that up. 6 months, I mean, not too bad. They're at 387 in the Thanksgiving-ish meltdown. 380. P ratio, this can't be right. 4.51. That's not right, so I guess we'll have to do it ourselves. Oh, shucks, that's the problem. I'm not on the right thing. What were we looking at? Adobe. I'm on QQQ. I was like, this can't be right. So, okay, Adobe at 51. It's probably a little high, but they have melted down quite a bit, and that was just a small percentage of QQQ. And next year's EPS is 16. So I don't know, man. When we're talking about stock market bottoms for, let's just say, the top 100 stocks, certainly the top 50 stocks in the indexes, whichever one you're most attracted to, they're getting there, man. They're getting to fair value. So as long as you want to do an index type play or an ETF type play where you can eyeball what's in the ETF and how valued it is, doesn't seem like the worst time. By the way, NASDAQ is turning negative here. 0.09%. We're at 3:46 p.m. Dow takes, see, I'll take this Dow minus 0.43 all damn day when I'm rocking QQQ. I almost root for it when I'm in the process of buying QQQ, funny enough. All right. Let's see who else is here. Igor brings up the point that Kathy can't easily change her positions because of the size. This is true. There's been a lot of studies on this. It's an interesting point from Igor. I think that's getting significantly easier because of the size. And I do agree that this last 6 months has been a little trade heavy. But I'm going to say that I do not have the intellectual capacity to manage a fund that size. So I will leave it to the experts. Echoes, he agrees, huge disaster, horrible 2021. Listen, absolutely correct. And there's a ton of people, sadly, who bought ARK in January and February, which I believe was the highs. So no doubt, those people have a horrible taste in their mouth. I'll tell you guys that I've been in a couple different ones, but I've been in and out since 2018. And in normal times, it's a slow and steady upward. Now, does that mean it will always be? No, because it's managed. However, taking some of the froth off of the names that she's in is something you should be looking for to perhaps get back in. And then, for God's sake, you know, we all have to use our head here. Do you want 100% ARK? Of course not. Do you want to buy, how about me? Do I want Teladoc? No. Do I want Tesla? Not at this price. Do I want Shopify, Spotify? Probably not. So if I buy 10% of that in my retirement fund, then that's great. She can figure it out. And I feel like there's at least enough trust there that I have over the past few years to warrant it. What's up, Arthur? Good to see you. Facebook and Baba are amazing buys, Lion said. You're buying value growth. PayPal is also decent, but Facebook and Baba, I agree, are fundamentally more attractive than PayPal. Now, I like Baba where it's at. You guys know that I study the fundamentals is the first thing I look at, and I read the stories next, but I'm still nervous. I can't get past, you know, I've never been a Chinese stockholder. I owned KWeb for a while. I got out of that somewhere in the Trump administration when they were going back and forth every day. And so I can't buy into it. It's too much for me. But there is a lot to be said about a P/E ratio of 18. Everybody has their own risks, right? For me, this is not a place that I want to risk right now from a political standpoint. I also have inherent concerns about accounting checks and GAAP accounting measures that go along with Chinese companies. However, if you've been in Chinese stocks before and you enjoyed the ride, this certainly seems like a good place to be. And I would say if you're going to do the old Warren Buffett, blood in the streets, whatever, it doesn't get much better than this. Certainly not. And then Facebook on the other side, that's just momentum. It just cannot find a friend in the universe. No one's going to argue that this is definitely overvalued, cheaper than Google right now, almost unheard of. I'm happy that Facebook is in QQQ. And if they do ever get the support from the crowd, again, I think that this goes, even if this goes up to 30, some people are going to be pretty darn rich. And there's a handful of folks, let's see, last year it had a low point. Whoever bought it in here, in and around February in the 2s, they're certainly going to be happy. So I have no problem with Facebook from a fundamental standpoint. All right. Do you think the 5% haircut in Google, Amazon? Google's probably got to be done soon. Okay. Amazon, the only reason that you might see more on Amazon, a couple $100, $200, $300, I've talked about this before, is that their EPS is not going to provide the support line as long as they're spending billions of dollars on internal infrastructure. It's just the way it is. Now, I think that pays off in a year, and I think that not even a year, I'll say 9 months. And I think that it's still the long-term hold that you want it to be when you're looking for things like that. But I understand, if I was sitting next to you at a bar and you're saying Google versus Amazon, I could not argue with you that perhaps Google's a better buy. I think Amazon has a reach to the consumer over time, 5-10 years, that is going to be just absolutely incredible when you think about I need a tool or some batteries. I actually bought some of those watch batteries, the small ones that are a pain in the ass to find, and it was offering me same day. I just had to get to $35 in my cart, and I'm in freaking Cincinnati, Ohio, okay? Like, it's not like that this is Chicago or New York or something like that. Like, I live in... I'm within the loop, but I'm basically in the suburbs in Cincinnati, and they were saying get it by 5 o'clock if you buy XYZ more. I didn't need the more, so I don't care if it comes tomorrow. But when you get to that, holy cow. And it's going to be hard for people to catch up to that. Lion Elizabeth Holmes is sentenced. Let's see. I'm glad. It's too bad the people that, fell for that. I'm trying to bring it up for you. Wasn't on CNBC yet. So guilty of fraud 25 minutes ago. Prison term up to 20 years, so no sentencing yet. No date has been set for sentencing. Out of 20 years, what does she get? 10, maybe? Acquitted of 4 charges, so that's good news for her. 3 others were deadlocked. And she's going to appeal, which will keep her out of jail for a while. But you know what? How crazy is it that people can do these circus acts, man. What did we have this year when the semi-truck, the electric semi-truck was being pushed down a hill or something for a video? And I mean, investors don't even read. They just say, great, here's my money, take it all. And unfortunately, some of the people who say yes are managing other people's money, right? They're managing pension funds that are tied to retirements for firefighters and teachers, and they watch these things and they say, great, we're all in, and then this fraud happens. It's terrible. And it's plain daylight, right? You know, it's easy and understandable to be nitpick at people who lie, cheat, and steal at smaller levels. And, you know, obviously those folks shouldn't be trusted either. But holy shit, this lady went from $0 to $1 billion lifestyle change just by making up a story. I think the worst thing is probably if you worked at that company and you kept pushing it, right? Like she comes in and says, I need a PowerPoint that says we saved the world, and you do it. Because I'd be the first guy to walk out on that and just be like, you know what, this doesn't work, and I'm not going to be part of it. And if you ever do find yourself in that situation where you're not necessarily the speaker, right, but you're being asked to hide stuff or do weird things with accounting, I highly recommend you get up and walk. You don't want any part of that game. There's way too many honest companies out there. Get up and walk, or else you're going to find yourself at the courthouse defending someone like that who you don't like anyway, but you're going to have to defend them to save your own ass, which is wild and stupid. All right, done preaching. Igor sold triple leverage banking ETF this morning. That's interesting. So banks are obviously hot right now, particularly with, I would say, like the CNBC personalities, because interest rates go up, banks make more money, etc. Depending on when Igor got into that, it was probably a good move for the short term. Arguably the long term, there's the leveraged world. I can't condone it because I have no experience. But I think that the leveraged world is becoming much more acceptable on the ETF level. And I'll tell you in advance, I'll obviously do the video, but I will own TQQQ this year. When do I start on that? I don't know. And the thing that'll be the most important for me and the sake of my family is that I have plenty of regular stocks before I dip my toes into that world. And I'll be experimenting on a small level, but it should be fun. Quite honestly, walking out of last year on individual stocks, it just feels like, even though it's leveraged, God, it feels like safer. Like I would argue that is TQQQ safer than whatever stock is overvalued, right? Take your pick. And I think so, because the other ones can go to zero. And this can go to zero too, but I would say that if you don't have earnings and your price of sales is 50 to 100, TQQ is probably like safer from the downside perspective. But I'm saving a lot of website links because I'm gonna show you guys like a bunch of stuff that I've read. We'll see what happens. All right, Mr. Chada, what's your take on Crocs? Haven't looked at it in a while. They should be very proud of the year that they've had, though, because they absolutely tore it up. You're up 2.5. You got Morningstar fair value of 122. Sorry, you scooched that. So just eyeballing Morningstar, perhaps at fair value. Hopefully you got in below 100, which your last chance for that would have been April-ish. Does the streak continue? Don't know. They bought a shoe line that I'm not familiar with, but I'm not very cool. Crocs. Now, who did they buy? It has a goofy name. Hey Dude, right here. They bought Hey Dude, and they're sort of like canvas shoes. I saw it on the news. You know, I applaud the concept of expanding the product line. I think Crocs is solid. I can't really understand how much room there is left to run. But if analysts are right, you got another $2 worth of EPS here. That'll bring stuff down a little bit. And gee whiz, you know, 0.6, 0.5 billion more if analysts hit the mark. 23% growth. There's worse stocks out there, that's for sure. Where are we at today? Forward PE under 20. Price to sales under 5. I mean, there's some good signs there. I don't know how the debt will shake out after that deal. But, you know, take a look at the debt. I mean, it could be a great performer. I'd buy it on a red day, though. Let's see, who did I miss here? DC, GPN, and V's caught some good momentum. Yeah, Visa, man, people were dogging on them at 190 like the whole story was over. NASDAQ closed at 0.13% down. Dow about 0.5% down. I was never worried about Visa tanking, but I think what has happened, and I've said this many times, is that we probably lost whatever we thought of cross-border travel in 2022. COVID screwed it up again, and it's the same stupid thing that we went through in 2021, right? It's like we had no cross-border travel from January to March. Things opened up, there's a little bit, and we're setting up for the same daggone thing, particularly Asian travel. So going to China, going to Hong Kong, going to Japan, from America or anywhere else, it looks like it is insanely difficult right now, and that's a killer for Visa. But I feel good that if you were to invest in Visa today, that if you agree to yourself to hold it for 5 years, that you'll be very happy along the same lines as many of the other top 100 stocks in the NASDAQ. I think there's a lot of opportunity, and I'm looking forward to a good year from them. If I could do it all over again, I probably would have focused on buying 100 shares of Visa, but I got closer in PayPal, and so I'm just rolling with PayPal. Because that's expensive. It's expensive to get 100 shares of those companies, at least at my level. It adds up. Lion was talking about Disney, wanted to get on at 140. I think you'll have an opportunity to on a down day, get close to that 140 again. Their headlines are very negative right now. And Lion, the other one that could come in for you to get closer to that is the CEO discussion. So obviously Iger, I believe, is leaving. Is that on these headlines? Anyway, I believe the CEO is leaving. It's not showing up here, but depending on who they pick, that could go up or down. And it would probably be inclined to go down at first, only because we know what we got in Iger in the market. So I don't know. 140 would be decent. This is crazy. And I think you'll get another chance, because I did also read that Hong Kong parks closed. That's certainly not the last of the park closures for this new wave of COVID. So just wait for the negative headline. They need the parks back. The Disney Plus dream is incredible, and they've done a great thing, and they're going to keep building it with Hulu and all that. But I think all of that's priced in. Now you need parks and tourism to come boost this one back up. and you're not missing anything at today's P ratio. And next year, I just don't know how anyone can project EPS for next year with Disney, with the uncertainty of the parks. And I think it's a 2 to 3 year hold to really care to get the full value out of it. High growth is bleeding for Lion. Palantir. Oh God, you still have light speed. DraftKings, Palantir and DraftKings. You either sell them or you're gonna have to double down. So I bought some Palantir yesterday, like 10 shares at 17. I think it's got a very solid floor around 15. And I'm prepared to go down that hatch. That's another one that just because of its price point, I feel like I could easily develop hundreds of shares over time and do the call options in the future. So I'm okay on Palantir. DraftKings, Lion, the good news on DraftKings came out today. Let me see if I can show it to you. I'll make you wait while I type it in. Right there. New York sports betting live in time for the Super Bowl. They just passed this thing in like November. And this is the most important part. Mobile sports betting. I don't give a hoot about the people that have to walk into a place. But mobile sports betting in New York kicks off, I believe it's on Saturday. So this is big news. All the work and investment that all of these companies that are posted here have put into New York will finally start to provide some revenue. So very good news for DraftKings, that is essentially a price-to-sales company. Better than not chance they'll have more sales in Q1 than Q1 of last year, almost for sure. Plus, hey man, we're going into the NFL playoffs, and so far we haven't canceled games, we've moved games, but now all we got to do is get past week 18, which is Sunday. That's the last week of the regular season. No way that a playoff game gets canceled. No way, at least in my opinion. All right. Igor, NVIDIA is the new Netflix. That might be true, but I think you got to, if you're going to say that, I think NVIDIA has to be down more. And I'm not against owning Netflix for the long term either. I'm not going to probably buy it because of QQQ, but I think Netflix is doubted way too much. Intel is the new NVIDIA. Very interesting, Derek. Good to see you. Igor says maybe. He says it'll blow up. Just remember me. Derek was in on Intel earlier this year, maybe at $30-ish, something like that. Give it time. If you're buying Intel, and I know that this is not Derek, if you're buying Intel to make money tomorrow, you're probably in the wrong game, right? But if you're buying it for 5 years and you like to get a little dividend with your stock holdings, seems good. It's probably also another one at $50 that you could reasonably over time accumulate 100+ shares in and sell those calls on it. I think it would be a good candidate for that because it's always going to have these headlines, right? I'm up, Igor, I'm up too much on NVIDIA to sell. That's crazy. I'm worried about short-term downside for you, but every time I worry about that, it doesn't happen. Just know one thing, guys, and this is coming from someone who has Taiwan Semiconductor. This is somebody, I want to buy some other chip stocks. Chips are beyond cyclical. So pay attention to the market outlook, not the stock market. The chip outlook for 2023 is going to be a monster in terms of the future for all these companies and all the ones that are over here too. This year, the whoever does it, Gardner Research or somebody, saying plus 15%, which is great. But you can track this in your own life. So I have a teenager and a boy who's younger who have PS5s that I managed to get for Santa Claus, and PS5s are popping up, man. I was in the weeds on that stuff, on trying to get 2 PS5s. I got them legitimately from Walmart, no back alley deals, but they are easier now than they were before Christmas. Now you're still going to see them on Craigslist, Facebook, whatever for $700, but Target. If you're looking for a PS5, don't go to Walmart. I can tell you that I had a ton of success signing up for Walmart Plus, whatever the hell that is, for $10 a month. Don't do the free trial. Buy the membership for $10, and obviously you're going to cancel it at some point. And then they have special queue lines for Walmart Plus customers, and I went 2 for 2 in a 2-week span to get PS5s. And that's not me doing software, that's not me doing anything. It was following the tracking on Twitter on when they were going to launch it, and they say it, they make little posts about it, and then I'd go there at that time 5 minutes before, log in, credit card, all that crap. And sorry, the other game, if you're going to play that, I found it was more successful to do it on the app. So sit at your desktop, log into your app, and then if you got to switch, you got to switch. But I think like the queue line for the app was, in my opinion, seemed to be processing faster. But there's your PS5 lesson of the day. All right, who else we got here? DC wanted to avoid capital gains taxes, then I gave up on my Etsy gains. So I made a lot of mistakes last year. I hit Etsy out at the right time. I would definitely consider going back into that one. And unfortunately, DC, because I was in it long enough to have a good read on it, the Q2 sucks for Etsy. So it's going to be awesome. They'll crush Q4 earnings. I have absolutely no doubt about that. But then they're going to turn around and say spring and summer, we don't know what to think, and then it's going to tank a little bit. Don't forget, though, they have EPS. They will not go down too far. But don't be surprised if you're seeing the 150s or something. And where you're at today, if you're going to avoid capital gains, then I would encourage you to try the best you can to wait till Q3. Get to September, October, November, when that holiday hoopla begins again. It's just the way it is for that particular stock. SPY predictions for tomorrow. Good God. Let me see what today was. I wouldn't be good at this because I actually don't track the SPY. But here's what let's take a look at the last 5 days. Am I on 5 days here? Why is it only showing? Oh, it's going by hour. Never mind. I will say, how about this? I'll give it to you in another way. I'm going to slide this over. If tonight, where's our little Bitcoin friend? If crypto turns positive before the morning, the SPY will be positive. If it drops into the 42s, below 42, the SPY will be down. I'll leave it at that. Crypto's been in a very interesting way, in my opinion, particularly with growth stocks. Crypto's been an interesting way to get a read, a early preview on the market by just when you wake up in the morning. I got kids going to school, so I'm up like about 7 o'clock, and I go to this site. Bitcoin market cap. This is a good site. Let me center it for you. And I'm not a crypto expert, so whatever. Maybe it's the worst site ever. But they appear to have real-time quotes, okay? So this is one of the first places I look at to see what did crypto do overnight. Was there a crash? That's the only thing I'm looking for. Was there a crash or was it up big? And usually the stock market follows, at least to some degree. Now, crypto could go down 5% and the stock market or the SPY's only down 1%, but your green or red days, you can sometimes predict before the market's even close to open. Because you know how futures, like, I kind of subscribe, let me get my words out here. I don't know where I read this, all right? So do your own research. But I read a quote once that you don't buy or sell anything until 10 a.m. Eastern time, which is what I sit at. So a half hour after the market opens, you let everything catch up and fluctuate. And I've noticed that the 9:30 and 10 o'clock time frames can show significantly different stories for what you thought was going to happen. And I think that happened again this morning. I think we were very, very slightly green, and about 10 o'clock you hit red. That might be off the top of my head, so don't quote me. All right. Where's the bottom for SDC? I don't know. That ship is ugly. And no kudos to me for being interested in that one. 211. I mean, there's probably, I'll be super honest, there's probably some stupid thing I do at this level where, like, it embarrassed me so much that if it goes under $2, do I just buy like 300 shares for just giggles in case it does bounce back? But it is terrible. Mismanagement beyond belief. I don't even know what to say, except when I got in that company, which was maybe the fall of 2020, somewhere in there, there was the pandemic excuse, right? And it makes a lot of sense. People didn't go to get their fittings and all this other shit, and sales were down significantly. And you could see it. It was very, I was in every investor report. I was reading every known article to man. And the worst part for me is I was in maybe $7, $8, $9, and it hit like a 16. Is that on here? This is 1 year chart right here. Yeah, okay, $15. It hit $15 on Jan 26, and I don't think I was quite 100% up, whatever the number was. And so I said, like, I'm going to wait for 100%, and then I'm just going to be done with it. And you saw where that chart went from there. And every single freaking quarter of 2021, the management comes into the earnings call, and they're like, new excuse. People aren't coming back. People aren't coming to stores. Expansion internationally is delayed. People get shot at our factory, so factories close down. Marketing conversion is down, so we're cutting that. And it's just ridiculous, absolutely ridiculous. So will $1.50-ish, $2, I don't know, if I find myself in a windfall for some reason, maybe I will just buy 300 shares because this price is embarrassing. And hopefully they fire the management and somebody 10 years from now will do something with it. I mean, at this price, they should be bought out. If I was a line, I would buy it and burn it and just say, there we go, competitor gone. So that's probably what you're hoping for in STC land. What's going on, Dan? Every complete individual stock picking knife falling failed in the last 12 months. Yeah. Disco beyond DocuSign Baba. I sold when I could when he could handle a small loss and moved in. Vanguard, good for you. Hate this market. You're not the only one, but you probably did the right thing and you moved to an index of something in Vanguard. So at least you know that you've got participation and you've probably eliminated any significant downside. Just buy SPY and DCA. Never bet against the Americas, greatest country in the world. That's funny. What's your outlook on Palantir? Just entered. So I like the Hyundai partnership. If it's like anything else, I didn't read all the details, but let's just say it's like the Department of Defense. You go in with a sort of test contract, and hopefully you spread your wings, or you spread your web in there of your software. And then in 2 years, that contract goes from, for sake of example, 10 million to 100 million. It's exactly what they did at the Department of Defense. It's exactly what they're working on with other governments. And this is the unlock. If you believe in Palantir, it is going to corporate business, okay? I would not have been as bullish on Palantir if they were only government contracts, because those things dry up, because we know about how the government balances their checkbook, right? Not very well. But now that they've got this corporate business that's growing, I like it. It's just going to take a while. Next year's EPS projection is 20 cents, right? Multiply that by 100, which may not be fair, and you got a $20 stock. So if you do buy it and you are excited about it, try to get a few hundred shares peppered in during this downturn and then wait 5 years. Not all this stuff turns around in a day. Lion, Palantir's 5 year, and that's funny that you just came up the rear and said that. Derek Close, Vanguard, don't buy SDC, just sit, watch, and thank God you're out. Well, that's probably the best advice. Sometimes I get these little mean streaks where I'm just like, man, this screwed me so hard, I want to screw it back and get it at 2, but Derek's right. Sometimes you just get in a dog and the house burns down. That's exactly what happened to me. Luckily, and I've tried to share this on my videos, like as much as SDC was like a dog, I made more money off the Etsy win getting out at high. So it's suboptimal for sure, but on the same token, like a stock like that, it wasn't like I mortgaged my house and said STC is going to solve all my problems. So you got to keep it in perspective. Chestad's here. Today swung up and down a few times, and he ended up plus. Good for you. Nice job. And guys, I see that it is close to 4:30, so I've got to roll. But we'll see what goes on tomorrow. The thing about Fridays, and this isn't my expertise, but it's something to watch out for. The thing about Fridays is they're big options days, technically. So people who have calls and puts out there, there's some days of them, some of the Fridays are bigger than others, and I don't know enough to say if tomorrow's big, but we could see a decent chunk of action with expiring options tomorrow, and we'll see what that does to the market. So DC software sector, be super patient and make sure you're not buying 100 times sales. So that's the last thought of the day. Thanks, everybody. Good to see you. Hope you're doing well in the market on these first few days. Got a long road ahead of us, man. Get excited, because if there's anything else, I can't imagine we don't get a discount again. If the market goes up from here, the next discount opportunity besides earnings is going to be that very first interest rate increase, right? And they're saying March. So I don't see why anyone would buy on a green day in 2022. Certainly not the first quarter. I will not buy any single stock or index if it's up for the day, and I don't care if it's 0.15%. I will only buy red days in this first 90 days. That's how I'm looking at it. You know, do it however you want to do it, but keep those things in mind. We got several events coming up here. So All right, guys, have a great day. We'll see you on the next video.